Hey everyone, welcome back to Corporate Decoder, the place where we dig through corporate filings to reveal the hidden stories. Today we've got Battalion Oil Corporation and a report that tells a tale of shifting assets and a potential payday. So what is the big news from Battalion Oil Corporation? Well, it looks like they're selling off a significant chunk of their business. Specifically, they've signed a deal to sell their oil and natural gas properties in a place called the West Quito Draw area. Think of it as them streamlining their operations, focusing on what they think will bring them the best returns. This report is from the 18th of December 2025 and it signals a major move for the company. They are agreeing to sell their West Quito assets for a price of about $62.59 million. This isn't just a small side operation either. These properties represent about 12.4% of their total proved reserves from the end of 2024. That is a pretty substantial piece of the pie they're letting go of. Now, this kind of deal doesn't just happen overnight. It involves a formal agreement, a sale and purchase agreement, as they call it. And you can bet there are a lot of details to sort out. The date for this proposed sale is actually backdated to the 1st of December 2025, and they expect the whole thing to be finalized sometime in the first 3 months of 2026. The buyer in this deal is a company called MCM Delaware Resources, LLC. They put down a deposit of about $6.26 million, which will go towards the total purchase price if everything goes smoothly. It's a sign that MaxCM is serious about this acquisition. So what is Battalion Oil going to do with all that cash? If this sale goes through, they're planning to use it to pay down some of their existing debt, specifically under their senior secured credit agreement. That is a smart move, reducing their financial obligations. But they're also earmarking some of that money for general corporate purposes, which can include things like looking for new acquisition opportunities or funding their planned drilling projects. It shows they're not just sitting on the cash, but planning to reinvest in their future growth. Now, like most big deals, there are some strings attached to this price tag. The $62.59 million isn't set in stone. It can be adjusted based on things like operating expenses, any new money spent on the properties, or even revenues earned between the effective date of the deal. And when it officially closes, they'll also be looking at things like property titles, any potential environmental issues or damage to the assets. These are all standard checks and balances in big asset sales, especially in the oil and gas industry. Both sides are making promises and agreeing to certain standards of conduct. Battalion Oil will continue to operate these West Quito assets in a normal way until the sale is complete and MaxCM is agreeing to the terms of the deal. But here is the important part. This deal isn't a sure thing. There are several conditions that need to be met for everything to go through. If these conditions aren't met, or if some major adjustments to the price happen, like if the adjustments add up to more than 20% of the purchase price, which is about $12.52 million, then either side can walk away. If the deal hasn't closed by the 26th of March of 2026, it could be called off. So while they have an agreement, there is still a chance this sale might not happen, or it might not happen on the terms they've laid out. It is also worth noting that Battalion Oil has brought in an expert, Ten Oaks Energy Advisors, to help them navigate this sale as their financial advisor. That suggests they're taking this process very seriously and want to ensure they get the best possible outcome. And finally, this report is signed by the top boss, Matthew B. Steele, who is the Chief Executive Officer, on the 19th of December 2025. This confirms that the company is officially acknowledging this significant divestiture. Now let's look at this from a bigger picture. Battalion off a significant, but not overwhelming, portion of its assets, this suggests a strategic shift. They are likely looking to reduce their exposure in a particular area, perhaps one that they see as less profitable or more risky going forward. The decision to use the proceeds to pay down debt is a very conservative and smart move. It strengthens their balance sheet and reduces the interest burden. However, the fact that they're also planning to use some of the money for potential acquisitions and future drilling means they aren't just going into a holding pattern. They're actively looking to reinvest and grow, but perhaps in different areas or with different strategies. The key risk here is whether these future investments will be as successful as the assets they are selling. The oil and gas industry is volatile, and what looks promising today might not be tomorrow. The adjustment clause in the purchase price also introduces a bit of uncertainty for both sides. For current investors, this could be seen as a positive step towards financial stability and a more focused business strategy. However, it also means they need to watch closely how the company deploys the freed up capital. Will the new ventures be able to replace the revenue and reserves from the West Quito assets? That is the million-dollar question, or in this case, the $62 million question. Overall, Battalion Oil is making a calculated move to manage its portfolio and financial health. It is a sign of maturity in their strategy, but the real test will be in their execution of future growth plans. Alright, that is our breakdown of Battalion Oil's latest filing. What is your take on this asset sale and what it signals for the company's future? Drop your thoughts in the comments below. If this deep dive was valuable, hitting that like button really helps us out. And be sure to subscribe for more regular corporate insights. And don't forget to check out our Discord community. The link is in the description. Thanks for watching. See you next time.